Good morning, video morning brief of the U.S. stock market, Wednesday, February 19, 8:49 a.m. Eastern Time. I'm Rich Pass for Critical Point. All right, let's begin with a quick little snapshot. The model's assuming we have a level 4 downswing. The level 4 bottom was yesterday, so if it takes out yesterday's low in the cash market, futures markets, good chance it's going lower into tomorrow, if not the following day, and maybe even a little beyond that. Now, level 3. It's tricky. It's extremely tricky. I'll be surprised if this works even, but yet the model won't let go of it, and neither will I. Going for last minute level 3 top place yesterday. If you're looking at some of the futures markets overnight, and they were higher still, but now backing off, just go with it also as a last minute chance for a level 3 top. So what do we mean? What do I mean by level 3 and level 4s? Well, the level 4s are basically inter-week swings. Those swings, when you're looking at just one direction, sometimes one will occur during a day only, so it can be the major intraday move, but generally thought of pops and drops during the week. There's a series of those patterns that help make up a level 3 pattern. That's, in my opinion, a true trend when you look at a daily chart. And the level 3 is really like a monthly buy-sell signal. It's the highest price, lowest price of the month. It's normally the most important trend. Sometimes it only lasts a few days, but it can last a few weeks even. All right. So I've redrawn this arrow for the level 3, and what it's saying is the market really shouldn't bottom to next week. So I think the market's going lower in the next week. So it should go lower into tomorrow, next day, maybe a bit beyond for level 4, pick its head up for level 4, then right on down for the next level 4, and next week we can start shopping for a level 3 bottom. Okay, so that's the best forecast. Now, what's going to occur if by chance it trades above, on the futures side, above 6157.75, and also trades above whatever the highest price is so far this week, last week for the cash market? Then, if it does that soon, what I'm going to do, and the model will do it, is it's going to move this level 3 over to the around February 11th, and maybe go back to February 7th. So that would revert to what a prior forecast that was suddenly saying, whoops, we had it right back then, let's get back on track. What this would suggest is the market can be higher in the next week, but it ought to top next week for level 3 and then down again, and it would probably reduce the amount of time. This could mean that we're in a larger up move as well as just a quiet sideways range, versus the idea that if this market really will go down into next week, the following week, we may have started that seasonal tendency to go down from February 16th into March. And yesterday there was some heavy named, big, well-heeled technical people were on board of that. And then last night, one of them was upset at how the market behaved and said, let's rip this higher, let's get it over and done with. In other words, he wants to wash it out because he still wants to go down. Now, that same person, interesting enough, is putting out a forecast that I've been talking about for quite some time. He's saying down into March, but he's also saying minus 7%. And that is becoming a more popular downside target, and I've been talking about it for months. That's the minimum downside target going into a minor long-term bottom due sometime now to October. And this person's being quite aggressive, saying it may be here as soon as March. Drop it that much, beat it up. There could be that much shocking news. And that person has their own proprietary studies that are quite famous. So, you have to pay attention to those kind of people, especially if they're supporting your own analysis, okay? So I think there's still a chance to make this work, but I just got to warn you, this market can still go up on us. So now into early March, and then finally down in March to late March, early April, okay? So, things to watch out for then, that we might be on the right track here. The model's correct. I want to trade below yesterday's low in the futures at 61.18 and a quarter. And you can also look up the cash price. Should be on our way, more so if it does that today. Now, it is moving down. I like it. Why is it moving down? Well, there's a variety of news that I'll discuss in a moment. But the big one is the interest rates. I told you last week that was a bit nuts. That was kind of like an oops move. Why did they put interest rates down that hard, that fast? The model was right. It was supposed to be down. but it was down more than anticipated. And I said, we could get a knee-jerk reaction at least. We can get an oops the other way and put it right back up just as fast. Well, look at that chart. They're putting it up just as fast, all right? Now, we do have to look out for next, say tomorrow, for a level 3 top. So maybe this interest rate just wants to chop around. Maybe it's going to go right back down. Don't know yet. But currently, the best forecast is the interest rates are going higher into next week. And then on the weekly chart, it's looking like we have an opportunity to be right after all. It's going higher into March, maybe higher into summer, and the longer it stays up, higher it goes, the more negative it could be for the stock market and economy. So let's discuss some of the news that's going on out there right now. Basically, the NAHB, the home builders, their sentiment of where the future's going took a nosedive drop for January, worst drop in 5 months or something like that. And then I just saw from the Federal Reserve, St. Louis Federal Reserve, on the housing constructions, also took a bit of a dip there. Not necessarily huge, but it does show you. Now, that could be seasonal, that things kind of slow down at the start of a year, and then we get busier into summer, and then we start slowing down again. So there may be a need to do some seasonal adjustments there. But right at the moment, it doesn't sound like the housing people are that happy. And they even put out a memo of saying they're concerned of the Trump tariffs hurting the housing industry. And that would primarily be from products coming from Canada, I would assume. All right, other thing we want to watch is the NFIB in terms of CAPEX took a nasty drop at the start of the year. What that means is companies are saying we're not going to spend as much as we told you on building our businesses or redoing our businesses, upgrading, and it's basically because of nervousness of where we're going here in the future with the Trump tariffs primarily, but also anything and everything else that's going on politically and this and that, okay? So those are some things that concern people, and yet yesterday they bought the stock market anyways. They bought it Thursday, Friday. Why is that? Well, some of it is that they're watching the global market, and the global market's been doing better. People are shopping around the world for the first time in quite a while. We got the European markets up very well, and I'm happy with the model getting us on the bull side there in the last minute, but I also realized that's kind of new for me putting that out, and I'll give you an update here sometime this week as well, where we're at that. Bank of America come out and said they haven't seen such a jump in enthusiasm of buying global stock markets since 2010. They think this is the best buying. I don't know if they're gauging that on dollar amount or is it just what they're saying, what they want to do, what they're forecasting. But that's impressive. Now, the problem is, though, and I've been discussing this over the last month or two, is it a time for the global to do better, but the U.S. doesn't do so good? And the interesting thing, I look at Europe, and they probably did put in a minor long-term bottom. It's going higher into 2026. U.S. has not yet put its long-term bottom in. We're dragging our feet here in the U.S. Seems like we need to knock it down first, clean some things up, and then we can get on board with something better, okay? So it is interesting, the difference between the two, and we want to monitor that. But the thing is, I think it's the last few days it's actually encouraged some investors, I better jump back in there and buy the U.S. If the rest of the world's going up, my gosh, the U.S. must go up. It must be the leader. Well, not all the time. All right. Now, Bank of America also put out something is showing that as far as at least in U.S. trading, specific types of fund managers, that they're low on cash. Well, if they're low on cash, it means they're about fully invested. If they're fully invested, it makes me think of, well, who the heck's going to buy this thing to put it higher? So we do want to consider that as a factor as well. Okay, I think I've pretty much gone through some of the news and concepts there. Let's go ahead and zoom out for a little bit of a bigger picture here, what's going on. We'll go to the S&P 500 cash daily, and even though it looks stronger than I wanted, and it punched to a record high in cash, it did not do it in the futures, but that's just math and the premium erosion, this and that. But it was weird that I thought yesterday and a little bit late last week, the futures were not as enthusiastic of the upside, and the two should be linked. So the derivatives people, the high leverage people, which I would tend to think of a little more risk oriented and a little more scientific how they do things, they're not so positive of the up move. But the overall market went higher, and yesterday was a weird one in that they were kind of shopping for those other 493 stocks in the S&P 500, yet at the same time you could see these pockets where they were actually selling as well. It was a little bit of a confusing day yesterday. So I think what we want to watch out for is use yesterday's low, okay, at 6,099.31. If it trades below yesterday's low, give it a chance that it can go lower into next week, week and a half, but also realize that's also the 5-day average near it. It could be a trap. If they put it back up on us, we're unfortunately just going to have to throw a dart later. And if you really are concerned of missing out, if you're concerned this market is that strong, maybe it's going up into April for our more important level 1 sell signal, instead of down into March and up a little in April and then down more. I think what you're going to do, if you could buy this market if it goes higher, but I think higher than, say, yesterday, highest price for the cash at least, you could buy it, but I think you're going to have to be quick and nimble. If you're a long-term investor, and maybe an intermediate type trader during the year, I think you're going to have to become more short-term. And as I've told you in recent weeks, there's evidence that the level 1, level 2 traders, they're not trading the way they have done over the past 20 years. They are going more and more short-term. Why is that? Because they're nervous about the tariff news sideswiping them, okay? So they're trading faster, and some of those probably aren't that talented or experienced at doing that. So that could bring in some interesting noise into the market. All right, at any rate, let's look at the daily chart here, the futures. And I told you yesterday, if it goes higher, we want to assume it's actually going higher maybe into next week, and we're going to have to wait for this decline into late March to April. All right. Well, the futures went higher overnight, I believe, but the cash market, now the futures are backing off, and the cash market might have actually topped yesterday. I'm going to give this yet another day. You may not want to. If it's higher today, if suddenly it turns out to be an up day after all for the stock market, you may want to assume this is going to be higher next week as well. Jump in, go for it. But if you're one of those people who likes to sit on it for months on end, I think you're going to want to sell it a few times now into early March until we get it right, because I do think it will be down by late March, April, and I'll show that again on the weekly chart. For my personal stance, I'm adding tomorrow as the better time to, hey, if it's higher still by tomorrow, got to give up. I'm sure the model's going to give up and revert to a prior forecast, flip these level 3s around, and it's going to say, oh yeah, it's going to be up next week. But I'm willing to bet the model's going to say, and we're going to try to sell it again next week, is what I think is going to happen. At any rate, there is a chance a level 3 top is in place yesterday, today, depending on what market you're looking at, and there's a good chance it's going down into next week, if not the following week. Okay, into a level 3 bottom. All right, let's move on to some of the larger trends while we're spending all this time here. Let's go to the S&P 500. And yeah, that's not much of an up move this week, even though it punched to a record high. And what the model is saying is if it trades below the low of this week, 6,099.51, better be bearish. It can go lower into late March to April. But at the same time, the model then adds another warning saying, yeah, but watch that 5-week average. It could be a fake out on us. They still could put it up over the next couple of weeks, then down. Okay, so we're still got risk here being early, that this is flaky, fuzzy, we don't have it quite right. But overall, it looks like we're getting closer to really should go down into late March to early April for a level 2 bottom. Then we will debate, it should rally for April. It may only rally to a level 2 top, which means it's unlikely it will go to record high, and it may only retrace some of the decline, and then it should go lower still perhaps into May, June, July, or at least back down to the late March, early April price, okay? But there is that chance in April it does better than I think and goes to a record high. We'll deal with that and debate that on the way up here. Let's first focus on the idea. Let's take this market down, okay? Now, weekly indicator acting a bit bullish, returning to bullish. It's given us a false sell signal. Now it's working on a buy signal. That's an increasing odds quite a bit that the next sell signal will work. And at least it is overbought, warning that yes, we have a right to have some faith in the model, that we still want to look for a top. Now, for those of you who just don't want to give up on the bull side yet, you could look for just a down week as a sign of a level 1 top. And we may learn it's only level 2, which is why the market might be at a record high price in April. But again, those are things we can work on later down the road. What the model's saying, the next most important thing to consider here is the market ought to be down by late March to April, and it should top now into the early April and then go down into that bottom in March, April. And there may be minus 7% downside potential or more. But my guess is it won't be that much, and then they're going to rebound it, and it's going to be May, June, July when we get the minus 7% or more. And that doesn't have to work either. It's not guaranteed, but it's still the best forecast. All right, so interest rates are also going to be a bit of a driver here. So if we go to the weekly chart of interest rates, look at that. I said, that was weird last week. They shouldn't have done that, knocking it down that much. Bam, putting it back up. It's working. I think it wants to go higher into next week, frankly. It might top this week and back down. And by the way, the Federal Reserve minutes from their last FOMC meeting will probably be released today from 2 p.m. Eastern or something like that. That can impact the market, at least day trading wise. All right. Weekly indicator came to oversold, rolling to a buy signal. Okay, so that's telling us to be bearish bond prices, be bullish interest rate prices. I still believe this market is bottom for level 1 for interest rates, top for level 1 for bond prices. Interest rates are going higher into March, pull back April, higher into May, June, July, and overall can be higher right into May, June, July. And the longer it stays up and the higher the interest rates go, I think the more it's going to hurt the stock market, or at least bother, upset, at least be a headwind for the bulls that are out there. There's still enough bullish information. The economy's doing well. Business is doing well. We can still pound out record highs in the stock market this year, but it looks like we're seeing increasing headwinds. We're seeing things that could actually turn this into a go-nowhere year. And believe it or not, even a down year. And then, of course, the wild card is what's going on with Trump, Maganomics, destruction of the government, the barbarians in the city, and the tariffs. Tariffs probably the biggest one that Wall Street's watching. I don't think they particularly care what's going on with the government and the people, and that's the way stock markets have worked for hundreds of years, unfortunately. At any rate, that's my scenario for this morning. I'm sticking with the idea it's going lower in the late March, April. I think it's we got to have another opportunity to go lower in the next week. I got to warn you, things can still go wrong for us here, but it is interesting this morning. At least we have the interest rates working in our favor. The dollar index trying to pick its head up, working a little in our favor. NASDAQ versus the S&P 500 slipping a little bit. Russell 2000 picked up the pace, and that equal weighted index, the S&P 500, picked up the pace, suddenly woke up. And NVIDIA and Mag 7 don't look so good to me. So it was interesting. They were shopping for the other 493 stocks yesterday as well. And that was a flip from prior days of shopping more for NVIDIA, Mag 7, more of the NASDAQ. So something's shifting. Is it just a rotation and they're still bullish? Or is it shifting that somehow they're going to be about ready to backpedal and sell everything across the board? Don't know for sure, but there's the interest rate chart for the intraday still working for us. And let's double check on the 6-hour chart there. And it looks like it's backing off. And I now have, this is a delayed price down 11 3/4 on the S&P 500 futures. I'm going to give it a chance to go lower in the next week. If it takes out the high of this week, got to start considering it's going to be up next week, not down. Past results and unassigned indicative future results. Have a great day. Thank you.